Or two, we'll get started here. All right, guys, let's go ahead and get started. Have our disclaimer as always. There's risk associated with trading. Please be aware of those risks. Not your financial advisors. Have no interest in the trades you place in the market. If you are placing live trades, please do so at your own discretion, here for educational purposes only. Top-down process, higher time frame prep, higher time frame, smaller time frame prep. Check correlation, check news, configure our trade copiers, prep our workspace for the day for trading. Step 2, higher time frame, smaller time frame strategy. Focus on our areas of interest, main strategy focus, plan trades, and scan for setups. Step 3, trade management. Once we're in a trade, always have an exit plan, whether that's a stop loss or a target. Manage that trade according to our trade plan and our risk parameters. Step 4 is journal and trade plan. So we'll review our trades, study our trades, improve and repeat, update our trade plan accordingly. Morning process, load platform and connected data, step 1. Step 2, set leader and follower accounts in the trade copier. Step 3, set max risk per trade in Easy Trader. Check news, Forex Factory, Financial Juice, 2 sites we use for news. We'll check leaders, laggers, which markets are stronger, which markets are weaker. Look for a boss break on the 10-minute volume chart to determine a directional bias. We're going to determine the trend on the higher time frame and a smaller time frame. Map out fresh areas of interest on the higher time frame volume chart. Next, we'll map out the order blocks and the break of structure on the 1-minute volume chart. We'll determine our anchor points and draw the real-time profile for the CWAP trend trade. Be patient and trade well. We only want to trade confirmed setups. Post-trading, we're going to log every single one of our trades. Take screenshots of each of our trades to review the setups post-trading. If we took a stop out, what did we do wrong? What can you do to improve going into the next day? We want to track our progress and update our risk parameters accordingly. Let's take a look at news. So today is Tuesday. Had some news at 8:30, got some more news at 10 a.m. Go ahead and mark that. Some news at 10:30. See what Financial Juice has to say. Same thing. All right, so we got our news alarm set for the day. Let's take a look at the markets. Crude opens first. Crude hasn't cleared these highs. Be some resistance up in here in crude until it could break through these highs. Highs, lows. Coming up, testing the highs. So if they want to come back and test the lows, this is a big move up. So we'd expect consolidation. They've been trying to grind their way up in the overnight. Just put in an order block. We're at the highs of that range, getting some standard div from these highs. It's all demand and support. This is support. Tight range. So the last down bar, I already hit it. We're not really trending. Crude's not trending. You haven't broken out previous day's highs, so we can't draw a CWAP trend trade or a macro CWAP trend trade yet. So crude's in tight consolidation. Did break and close above these highs. It's in some resistance, some supply. Let's see how it reacts out of that zone. Break. Let's look at the equities. Uptrend, right? Pushed up in the overnight. Closed above all this structure from the previous day and Friday. Got through that gap. Big move up. We did break out of the previous day's highs, take the lows from the previous session. Let's go look at some SMC order blocks. Last down bar at or below the value area low. These are really touching it. Take this one inside the zone, the uni zones. Or this would be the actual SMC order block at the value area low there. The inducement bars. This is also this was resistance that was broken. So it now turns into support. NASDAQ's the strongest market. I took natural gas off. People were asking me. It was causing some little bit of lag for me too. We got the ES. Same thing for the ES. Uptrend. Broken support will turn into, or broken resistance will turn into support. Right around that uni zones order block a little bit before it. Big rotation in here for an SMC order block. It's the last down bar. At or below the value area low for that rotation. The inducement bar. Crude opens first. Crude's the first market to open in about 13 minutes. So we'll wait for the markets to open to see and get a pullback, start engaging. We want to be trading long. Big pictures up, trends up, smaller time frame, higher time frame. 1-to-1 into the highs from this CWAP. Nasdaq's the stronger of the two. It's overshot it. It's a low volume here. So 1-to-1 into those highs. I'm going to take a limit order. Is this not the right chart? Nope, it's not. There we go. Nasdaq is the strongest market. Pulling back to some low volume. Make sure we get the fill here. Sean and I were doing some work on the workspaces yesterday, so we got some different workspaces we're testing out with some higher time frame Rankos and stuff like that. So he'll be in today to talk about it. That's why my charts are all messed up. This is the wrong one too. Okay. I want to make sure I get this fill. Pull it for now. Order block's not with trend. Can't take it. Crude opens in 5 minutes. Testing that supply, that resistance. Got 3 minutes till crude opens. 2 minutes now. All right, got 1 minute until crude opens. 1 minute. There's the crude open. Crude's going to try and break these highs. Still in some resistance, some supply. Tap back later. Trying to break through it. A lot of supply, a lot of resistance at those highs. Let's let them break through first before we start looking to take any trades. All right, crude. Like you're trying to break through. Take a CWAP trend trade on crude. Break a structure. Broke through that area. That supply zone. Let's pull back crude in an uptrend. Let's give us the pullback. 14s, that's some pretty strong buying. Just need the pullback. Let's go crude. Tag us in. Front running the CWAP for the CWAP trend trade. Needed to pull down and tag us in. Give us the fill. See what these equities are doing. Tick strike going on. Pulling back. Let's go crude. Give us a pullback. Overshot that CWAP. Crude's pushing up. Need you to pull back, crude. Let's go. Come tag us in. Come on, crude. Pull back. Crude's in an uptrend. A lot of strength in crude. Equity's pulling back a little bit deeper. Let's go, crude. Come tag us in. Need that pullback. Still waiting for the pullback. Equities coming back deeper. Waiting for the pullback. At about 14 minutes till the equities open. Let's go crude. Give us something. Let's give us a pullback. Crude still pushing up. Come on, crude. Give us a pullback. Still pushing up. Got them grinding their way up. Definitely in an uptrend, no question about that. Now, can we get the pullback is the question. Strong uptrend in market like that. We need to pull back, get long. To go crude. Long on crude. Let's give us the follow through. Let's go. T1 on crude. Break even. Give us an order block here. Let's push up. Go test those highs. In an uptrend, crude. Let's go. Continue. Got our runner. Got T1 on that though. Good trade. Right at those highs. Crude's in an uptrend. You want to trade crude long. Got about 5 minutes until the equities open. Pushing back down into some support. SMC order block. Comes back into that SMC order block. It's the setup. Confluence with that macro level CWAP trend trade. That's broken resistance that turns into support. Pull back deeper. Gonna pull back a little bit deeper for us to take the SMC order block trade on the NASDAQ. Still the strongest market. Broken resistance turns into support. Low volume. This is all low volume. See what that would look like into the highs. One minute till the market's open. So we'll just be patient. We'll just let the markets open. This is that SMC order block setup from the break of structure. Value area low for that impulse wave up. So there's the market open. Let the market come down. Some selling at the open. Remember, the boss break still came long. Still in an uptrend, macro level uptrend, right? Big picture's up. Mix. Got some selling, some buying on the NASDAQ. Crude's pulling back into that area. It's an SMC order block on crude here. Be the last down bar at or below the value area low. If you were to take this into the value area high, let's go see what crude's doing, or the NASDAQ, sorry. A lot of selling on the equities right at the open, pushing right back into that level. Coming to the break of structure. Got to watch that order block, both of them. Crude hasn't pulled back to the order block yet. We're going to set a limit order there for when it does, though. That SMC order block. NASDAQ's pushing down. Got a lot of confluence around that level. I'm going to take a limit order there as well, too. If it pushes into that macro level CWAP, that's also an SMC order block. And it's broken resistance that'll now turn into support. There's different things lining up for that trade to work. You just need it to pull back into that level. Might not get the crude pullback. Waiting for the pullback. What's the ES doing? Nada. Hidden div coming in too. Or SMC. Yeah, this is the last down bar at or below the value area low. This down bar is touching the value area low. So for this rotation, this break of structure. So you draw the profile around it from break of structure to break of structure. You look for the value area low and the last down bar to touch it. And then that's your order block for the SMC order block. And cue to pull back a little bit deeper to give it the fill to us. Let it pull back. Getting some hidden div as well on that pullback. It's not confirmed yet. Tag us in. Let's go. Kittis. One more shot. Oh man, that's dirty. Whew, that's rough. All right. Let's let it pull up. Needed to pull out of there. Broke through it a little bit. Let's go. Let's go in Q. Take a picture right there for T1. Break even. Let's go. Let's push up. Everybody get this trade? Let's go in Q. You're gonna break. You're gonna push out of here. Let's go. Don't kick our runner out. See what Crude's doing. Nice to get a trend line break coming out of there on Crude. Come on in, Q. Let's push up. Push up in Q. Excuse me. Let's push up. Let's push up. Let's go. Give us our second target. Now remember, this was the SMC order block, but it came out of an area. So this was actually resistance. It was broken through, and then this turns into support now. And it's also confluence because we have the macro level CWAP trend trade. We broke out of the previous day and Friday's highs. We start our macro CWAP trend or our real-time profile from the lows. So it's just confluence adding up. Come on, T2. T2, good trade. Everybody get T2 on that trade.
Good morning, traders.
Hey, Sean. Good job, guys. Good job. Crude still. Give Crude a little bit more time. It's still in, this is still support. Broken resistance will turn into support. There is this SMC order block. Hey, Sean, how's it going? Welcome, welcome.
I can't complain, man. You guys are great. You guys are champions. How's everybody doing? It's been a long time since I've been here, Lee. Who we got in here? I'm coming in here, going to be making some damage here today. So we got a lot of stuff coming in here. Roy and I got a lot of stuff to talk about, and we're going to kill several. Hey, Al's here. Alan, Alvin, Andrew, Andy, Babu, Barry. Hey, Barry, Brad, Brandon, Brian, C, Cynthia, David. Hey, David. David, Edwalk, Francisco, Gary, Hank, Ifran, Jack. Hey, Jack. Excellent. Oswald, Mark, Lee. We got the OG crowd in here. Robert Pats, Samir, Scott, Sergio, Steve. There he is, Steve W. in the house. Stevens, Thomas, Victor. Hey, Victor. Okay, so are you guys okay with me taking the mic for a few minutes since you guys have just taken that profit? And I wanna talk to you a little bit about some of the things that I've done for the past little while with Roy, and ultimately had a good chat with Mr. Bobby yesterday, and it's a lot of things. I want to bring to the table here, and I don't get a chance to come into the futures room lately because we've got some pretty big things happening, which will be, I think everyone's going to be quite happy in the future with that. But are you guys okay with me taking the reins for a few minutes? You guys take a couple trades already here. You guys are all set.
For sure.
Roy, you good with that?
Oh yeah, 100%.
So, do you guys remember back at the beginning when me and Bobby and Roy, we were kind of like trading, and we had a lot of Renko charts set up, and we had the AT Trader break when it was first started, right? Like when it was first coming out, and you guys remember all those days, and Bobby, me, and Roy were trading well and really well, and how many of you guys remember that when we first launched AT Trader and we first brought out the uni zones? You guys remember that? Okay. Some of the best trading that both me and Roy, and even Bobby did together was, with that foundation that we'd built in the layouts that you guys are using now. And then we've evolved and we've brought the divergence and anchored volume and SMC to the marketplace. But one of the things that I'm finding, and it's my job to come in and take a look at the trading rooms and improve performance and improve systems, and that's my job. I own the business, right? My job is to come in here and help make everybody more money. Would you guys agree that that's pretty important? Right? Make things better, make things easier so that everybody makes a whole lot more money. I'll wear that on my shoulders. I don't care. That's why I started the companies. Right? So it's one thing to sell products and it's one thing to sell programs, but it's another thing to really work in the trenches. And Roy and I, we do work in the trenches a lot. But someone had to teach Roy, and someone had to teach Bobby, and someone had to teach Ethan, and someone had to teach that. And we all work as a team. But every product,
John's the teacher.
Everybody that every product you're building or using, I build. Had to come from somewhere. So I know a few things about trading. I know a few things about system mechanics, design, what makes things work, what makes things doesn't. I'm going to ask you guys a few questions. What are the two constants in the market that never change? Let me see if anybody gets this. What are the two constants that nothing changes? Doesn't matter what system you're trading, doesn't matter what indicators you're using. Volume, yeah, Steven nailed it. Volume, what's the other one?
5 minutes till news, guys. Just a warning.
Volatility. Steven nailed both of them. Steven, I don't know, you're either Irish, you got a lucky clover, or you're just really good. Love it. So volume and volatility are the only thing that is a guarantee in the market. But sometimes you're not going to have a lot of volume, and sometimes you're not going to have a lot of volatility. Now, for years, Roy and I traded on Renko charts. Okay. And the reason for it is we can see structure better, make better decisions when market structure is easier defined. We started using volume charts because we brought in the uni zones to be able to show order block trading, right? But I would say that the uni zone order block setups are probably the least trade that's taken. Would you say that that's probably the least setup that's being used most of the time? Anybody want to agree with that? I mean, everybody's at the mercy of trading whatever they want to trade. I mean, you guys probably have 100 other indicators on your charts from what we have in the room. I mean, everybody's tinkers and everybody likes different things. But how many guys would agree that the uni zones order block is probably not the primary system? It's a good setup, it's a good indicator, but it's not the primary. Would you guys agree? Give me a yes if that would be a fair statement. Yes? Okay. So what I'm going to do is I'm going to show, I've been working on some things, and I love working on things because that's my passion. I mean, I love building systems. I love building things so that people can make money. I'm going to share my screen. I'm going to show you guys what I've been doing. Okay. And it's gonna basically, in my experience, it's gonna take the futures program to a whole new level. Like a whole new level. Okay. Now there's not a lot of changes here. Not a lot of changes, but improvements. Things that I feel will make everybody's lives a lot easier. Okay. A little bit more congruent. What you're seeing here is essentially a variation of what you guys are used to trading on. Okay. And I want to kind of talk a little bit about what you're looking at. Okay. And I got a trade setup checklist here we're going to talk about in a second. Okay. This is the higher time frame chart. It's the decision making chart. How many of you guys feel you're getting stopped out a lot? I know that's a rhetorical question, Roy. Roy got slapped in the face pretty heavy yesterday. Right?
Tell me about it.
Well, that's because there's a problem. Right? There's a problem. What do you guys think the problem is? When you're getting stopped out, there's two things. Either you're the problem or you're not reading the market right. I'm just going to call it as it is. I'm a trader. There's no picking favorites here, whether you're an educator or you're a trader where you got 20 years experience, you're greener than green. What do you think the problem is when you're getting stopped out? We can only blame it on conditions so long. Jack says me. I like that humility, Jack. Not paying attention to the bigger time frame. Lee nailed it. You're not paying attention to the big time frame. You're not paying attention to what's actually going on in the market. There's things that are happening that you're just not paying attention to. And a lot of times that gets a result of that is just, you get sucked into the tunnel vision. We're looking at the 1 minute time frames. We're looking at multiple different systems, right? Sometimes when you have a few different setups, the mind will take you down one path and you're missing another path. But from my experience and from what I've come to believe, all the really good traders that consistently put numbers on the scoreboard, everyone wants to know what they're doing. What are you guys doing? What's working? Why are you guys making so much money? They just understand how to read the market better. They're not pressing the button differently. They're not doing anything differently. They just have a better read on the market. And what ends up happening is when you don't have a good read on the market, you make decisions based off the smaller time frame charts. Let me just put this into perspective. Your boss chart or your AT trader chart should not be meant for decision making. You should never make a decision on those time frames. You should make an entry on those time frames. Are you guys following me? 1 minute charts are not meant for decision making. 1 minute charts are meant for timing risk. Okay? So when you ultimately fuck this chart up, everybody loses all their money. I'm a bold person, guys. You did not pay us thousands of dollars to come into our rooms and use our systems to muck around with your bank accounts and your prop firm accounts. I take this quite seriously. How many of you guys are buying prop firms and evals? I take it rather seriously. It's a business. So what I'm going to do in here is I'm going to give everybody a little bit of a facelift. We're going to take a facelift to the room and we're going to simplify things. We're going to make things a little bit easier. We're going to make things cleaner. We're going to make things more effective because we're going to get down to the foundation. We're going to get back to the foundation and where I taught the Gilberts and the Roys and the Bobbies all the things that they're using right now. Now, I'm not saying I'm Bobby or Roy or Gilbert or anything. I'm just saying they had to learn from somewhere. Right? So let me explain a few things. Volume charts are good when you're using charts to enter on variable range concepts. So if we're not using uni zones where we need a rally, base, rally, and we don't need variable range candles, if that's not the primary system for demand or supply, then what do you think the most important part of the market is going to be? If we're not using supply or demand as the primary, what do you think is the most important thing that we should be looking at? I'm going to spell it out here. What do you think SR stands for? Support and resistance. So let's kind of go back to a few things. I could take all of the indicators off my chart, or I could take every single indicator that everybody in here owns, put them on the chart. And one thing that will always stay constant, price action. Price action is a result of volume and volatility. Remember we talked about volume and volatility. Those are the two primaries, never change. As a result, you're going to get a movement in price action. You cannot have a movement in price action if nobody's trading the market and the market's not moving from supply and demand imbalances, okay? So as a result of that, certain things are going to happen. You're going to get double tops. You're going to get double bottoms. You're going to get range-bound markets. You're going to get uptrends. You're going to get downtrends. You're also going to get broken levels that nobody pays attention to. You're also going to see things that a lot of people aren't paying attention to. So what we're going to do is none of this stuff that we're talking about is done over here. You do that over here, I can't help you. You make your decisions on support and resistance on the smaller time frame, I can't help your trading. You're not going to make money. I'm just going to tell you right now, you will not make money trading on the smaller time frame structure. You might make a couple winning trades once in a while, but your read on the market will be completely messed. So, how do we fix it? Well, before we introduce volume charts and all that fun stuff, remember what that chart looked like? Anybody here remember when we just used this time frame here, the higher time frame Renko chart, where you could clearly see the divergence, where you could clearly see the structure, where you could clearly see the levels of support and resistance without trying to figure out which level is strong versus which level is weak and all of that, guys? Remember Lee back in the day when I was trading the AT trader and I was crushing it? Everyone's like, holy shit, what's going on here? Right? Exactly. I was using this. I was using this for decision making. Now, what if I told you that by using something like this, and now I'm not saying that we should never look at a volume chart. I'm saying I feel that this could be a lot better, a lot more effective, a lot cleaner to read. I also think that it's a lot easier to determine your macro trend trades. It's a lot easier to determine where levels are going to hold versus where they're not going to hold. Do you notice why your boss break worked this morning, Roy? Your boss break worked because it came out of a major area of support.
Yeah, that's why we took that trade on the
Exactly.
on the AQ. It was broken resistance turned into support.
Now, what about when you and I had a meeting last week and you said, Sean, I'm taking a break from the boss trades because I'm getting a little bit shattered. Roy's a great trader, guys. When I met him, he traded a funded account for 2 years straight. How many of you guys like Roy? Give me a yes. Roy needs to hear this right now because everybody's human. How many of you guys like Roy? He's a great trader. He's great at what he does. I need everybody to speak up here, Roy, so you can see it. Okay? I'm coming in here right now because I'm a fucking Jedi, and I'm going to help make you guys a whole lot more money, okay? And that's all I care about. So here's what's going to happen. I built the workspace. I spent the entire couple days working with Roy doing this. Everything here you see is a Renko chart. There's no volume charts on my time frames, okay? We've got Renko on NASDAQ, crude, S&P. Make sense? Now, this is going to be a completely new shift for you guys. I've got the boss breaks on Renko charts. Now, this is new. I'm going to explain it. Take an AVP, static profile. Draw your boss break. There is the value area low. You guys with me on this? There's two ways in which you can do a boss break. Okay, you can take the last down bar before the up move at the value area low, which you guys understand, or sometimes when you're dealing with a Renko, because it's not a expanded range candle, you can take the structure break that was sitting right on the value area low. In situations like this, there wasn't one. You guys see this? But if you have a value area low and you come down here, we have a little structure break like that coming off of it. That will be your area. I'll show you an example of what that looks like on the S&P yesterday. Take a look at this. This was, that's the NASDAQ. Let's go over here. Let's do the other one. Okay, you see this? This was the boss break from last night. We're gonna talk about this for a second. From here to here. Now you see here how we have the value area high is up here. See how this structure break happened right at the value area high? If that wasn't there and all we had was an up candle and then a down candle, you could do both. There's nothing wrong with that. With Renkos, they're all the same candle. So sometimes you might find that you'll get the structure reversal or you'll get the up bar, down bar flip on the value area high or the value area low. In this situation, okay, you can take a look. And I'm just gonna draw some zones here for a second. Right? The last up bar was here. Okay. The last up bar was there. But in a Renko, that's very tight. Okay. So you could take the entire structure break if you choose to. It's just bigger. Okay. It's just much bigger. You see how it happened here? It came up, tagged the structure breaks, tagged that up line, dropped down from it. You see it? Now, why am I sharing this with you? Because you're not used to seeing the boss breaks on this type of a chart. But one thing that I notice with a lot of traders, when they trade liquidity sweeps on boss breaks or when they trade any type of these types of setups, they're paying too much attention over here and they're not paying enough attention over here. And the reason for that is they're not able to read price action properly. You can't see if you're trading an area where liquidity has been used or not. A great example of a concept that I think I'm going to have to spend some time in a strategy class with everybody and teach this, okay, is if I'm looking at it like this, watch this for a second. If I'm looking at a boss break, you see it? Boom, 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 break the boss. A lot of traders would get excited. They'd be like, okay, I have a boss break. It's a fairly deep rotation. Right, you see that? You say, okay, I'm going to trade this. Perfect. So you put the static profile here. Let's draw a static profile from here to here. Okay. You come back down. There's the touch of that. Right there. Boom. Now this is where a lot of people don't understand liquidity. And I'm going to break these setups down one at a time as I go through this workspace because you're going to see how Renko charts are a little cleaner than volume, a little easier to read the market. Right? Volume is a great time frame, but if you're not using systems that rely on variable range candles, then you can really clean up your charts. Okay, take a look at this. If I drew a level down here, last down bar before the up move, let's make this a little bit bigger so you guys can see it. Okay, last down bar before the up bar, right there. Okay, so let's do that. Let's put a little line in the sand. You see it? But what most people aren't paying attention to is that this entire boss break, the next one, which a lot of people will trade and they'll get stopped out and they won't pay attention, is inside the other areas, which means this liquidity is not new. It means this entire move up has been traded through. This entire area is a waste. I want to see price trade above, give me a new area to trade up here. Does this make sense to you guys? You're going to be able to see these areas a lot cleaner with boss breaks when you're using cleaner charts. Great example. Take a look at the NQ. Okay. You see how this boss break here is way outside this boss break? Like the order flow is in a different location. If I draw like this, Value area low is down here. Completely different level of information. They're in different sections of the tape. Think of this as liquidity area. Think of this as a liquidity area. They're in completely different places. That's the difference between understanding where the right levels are located versus trading things like this. You don't trade in this. You can't understand which liquidity is good. You can't do it. It's just a bad game. Okay, now we're gonna just kind of make things a little bit cleaner here for a second. I'm gonna show you. What's nice is the time frames. This Renko chart, same thing. Okay, same time frames, same everything. No changing time frames. Just moving away from the volume up here, sticking to the Renkos. Okay. Now, okay, in relevance to the whole concept of the higher time frame, this chart is critical. We've changed this to the structure mode because Renko charts do not operate on price action mode. We always show fresh zones, tested zones, broken zones, never dead zones. We never want to show the dead zones. Dead zones are dead. They don't trade them. Okay. Broken zones, yes, we leave them on because they can become new levels of areas when you trade on the other side of them. Okay. Now,
and Sean, if you want to
yes.
show them the NASDAQ really quick, where that SMC order block was in relation to that broken support. That's why we took it.
Mm-hmm. So I'm gonna globalize these. See this area here? You're trading a 1 minute SMC level inside the big picture level of support. Does that make sense? What if I said half of you guys are probably taking way too many trades? You say, oh, I don't have enough trades. I say, no, I would say on the contrary. I say half of you guys are probably taking way too many trades. You're trying to trade too many things too many times when the market's not giving you a reason to. Your job is not to basically come in here and just start taking trades. Your job is to come in here and make money. Well, most people don't do that because the discipline goes out the window. It's easy for us to just come in here and make a decision, but it's not always so easy for everybody to be willing to say, I'm going to wait until I get to these key areas and then make a decision. What happens if today you come to every level of support in here and you get a good boss trade here? Maybe you came down, traded down, you got an AT trade or trend line break in here, right? Had a couple good setups. And then tomorrow you didn't even get a trade. And then the next day you came in and you ended up getting 2 more trades or 3 more trades because the market was just unwinding that way. The difference here is that everybody thinks that the market's just supposed to do what we want it to do every day. Well, who the hell gave us that power? We're not God. We're not supposed to sit there and control the entire flow of liquidity around the world. Our job is to come in here and read it, understand it, pay attention to it. So why am I doing this? Because I think it's a whole lot easier for us to come in here in the morning, use a Renko chart, globalize those levels, and then make decisions on the smaller time frame charts. Okay. Now, a couple things. What I would be doing in the morning, we'll talk about this chart last. Okay. Let's just take a look here for a second. Whenever I'm trading above the prior day's range, So this is a new rule, and I don't know how much you spent on this, Roy, but when I come in the morning, the first thing I do is I map out my macro trend trades. Why? Because it takes me 2 seconds. It's like you do it for 2 seconds, you put some really big score chips on your chart, and you may or may not get the trade today. You may get it 3 days from now. It's a macro trend trade, okay? Now, here's the key. I will come in every day, and I will draw a box around the high to the low of yesterday's range. Now, if I start trading outside of it, and I come out, and I retest off of it, and I hold out of it, if I stay out of yesterday's range, then what I will do is I will come in here, and I will take the macro profile, I'll plop a real-time profile from the low of yesterday's range, which we're doing. It's easier to see that on a Renko chart than it is on all the other stuff. You can see it. There. Why do you think the trade ripped from here to here? You could have got a 4x multiple on that, 5x on that trade. And I'm not saying you should trade for that. I'm just saying that's the market went that way because you have a whole bunch of things taking place there. Support level, boss break, macro trend trade. Tomorrow it's not going to be that easy. Later today it's probably not going to be that easy. Take a good trade, take a good win when it happens. Because we all take stop outs when they happen. So be grateful for when things line up and things are smooth and easy. But now we're trading inside yesterday's range. There's no macro trend trading environments allowed. I just delete it. I'm out. I'm inside yesterday's range. There's no macro trend trading happening. But we're also sitting here trading above the prior day's range. If I come in here, let's watch this. I just want to show how easy this is. It doesn't need to be difficult. If I'm coming in here and I start trading outside yesterday's range, we don't know that pullback's going to happen. I start trading outside yesterday's range. Okay? So what do? I take the low of the prior day's range. Come in here, real-time profile, take the low. Guess what ends up happening? You bank the macro trend trade. Really big trade. Imagine that. It's in support. What about the day before? Trading above the prior day's range. You're going to have trend trades when you're in trending markets. If you're in an oscillating market, you're not going to have macro trend trades. It's that simple. If I start trading above this side, right there, as soon as it starts doing that, I'm going to I could take this. It just went straight up, so I'll take this pivot low because there is no structure for me to bank on the prior day. So I'm going to come in here, real time, draw real time. There it is. Come in. I didn't get it. Didn't get it right there. Got it there. Yeah, it is, Cynthia. It's being recorded. Take a look at that trade. These are huge trades. You see it a whole lot cleaner on a Renko than you would on a volume chart. I can tell you that right now. You see it a whole lot cleaner on a Renko than on a volume. Okay? You're going to be able to read the ability to plot a macro trend trade. Let's take a look at crude oil. Okay? I don't know what's going on with my data. Did everybody else have a big data gap going in crude?
That was just a gap from the open.
That was just a gap. It wasn't an issue on that. I wasn't sure.
That was Saudi Arabia and Russia saying they're stopping oil production until the end of 2023.
Well, they're doing that because somebody wants to make some money, right? So let's do this for a second. Okay, let's just look at crude oil. I'm going to break these down one by one today, guys, because I think it's important. It's time for a lesson. Okay, if I start trading above yesterday's range here, if I start trading above the high of yesterday's range, and I go up here, You don't know if it's going to keep going or if it's going to come back. You don't know that. Nobody knows what's going to happen in the future. All we have is information from the past. That's how technical analysis works. So what you do is you come in here and you basically put in a real-time profile from the low. There you go. Okay. What about this? That's a big ass trade. That's a crude chart. 60. That's 40 points. Macro trend trade. Because we started trading outside of yesterday's range. Now, the only time you do a macro trend trade is when you're outside of the prior day's range. Write that down. Rule number 1 from a Jedi. You don't trade a macro trend trade when the market's not trading in a macro level. Does everybody understand that? These are money trades and like really, really profitable freaking trades. Like if I don't like to use the word, the G word, I can't, it's against the law, but I can almost G that if all you did was trade macro trend trades and you just took your 3 or 4 markets and just mapped that out every day and waited, you would be in a world of profitability. It's a really good trade. You say, well, it doesn't happen a lot. It does when you look at it on more than 3 or 4 markets. Okay. Does everybody understand the macro trend trade? I want to make sure everybody gets this. I need to make sure you guys are understanding some of these things. It's simple, simple things. Okay. Let's take a look at it. We're trading above yesterday's range. We had a macro trend trade. Simple is the most powerful, Lee, and that's why we're simplifying it back, because simplicity makes a lot more money. Give me a yes that you guys are okay with me coming in here and tweaking some things to help me you guys make a whole lot more money. I want to know if everybody's on the same page, or I can go make some coffee and make some breakfast. Okay. Now, so that's the macro trend trade. How many of you guys would agree that it kind of looks a little cleaner to look at your higher time frame like this as opposed to maybe some of the volume chart stuff we were looking at? A little bit less noise, a little bit cleaner, a little bit easier to see it. Okay. How many of you guys are okay with us going back to a higher time frame Renko chart to smooth up your charts, make better analysis, Unizone switching to structure mode so that you're not having to worry about trading? You won't be trading the Unizone's order blocks. You won't be trading those setups anymore. That doesn't mean they weren't a great trade. It just means, hey, we've got like 7 or 8 different systems. Exactly. Who cares as long as I make a lot of money, Brian says. Finally, we're getting it. Okay. So now what we're going to do is I just want to kind of simplify things down a little bit. AT Trader trades, okay? The AT Trader is a really great setup. How many of you guys like the AT Trader system? Richard does, Alan does, Lee does. Okay. But remember, Babu says so, great. Everybody has their preference, right? But let me explain a few things. How many times do you come in here, like realistically, how many times, and be honest with yourself, how many times do you come in here and your eyes, because of the AT Trader, because you got these trend lines, you got these arrows, you got these dots, all you see is this. You're not seeing the higher time frame anymore. You're saying, oh, I got a trend line break. Oh, I got a trend line break. How many of you guys become a victim to that? Oh, look, there's a trend line break. I did not build this software to trade it on a 1-minute time frame by itself. I built this software to take trend line breaks out of key levels. Only key levels. And with major divergence on the higher time frame. If I've got hidden divergence in an uptrend and I get an AT Trader break to the upside there, I'm going to take that trade. Okay. If I have a level of support in here, globalized, broken, tested, fresh. Now, if I had an AT Trader in here, a trend trader, an AT setup in here that gave me a reason to take the trade out of here, I would have taken the trade. Roy, can you do me a favor and let Ben know we got a little bit of a bug on the VM lean?
Okay, sure.
It keeps flashing like I'm in a rave on acid or something. You know, it's
okay.
Like, you know what I mean? Like You know how it flickers like that? I don't know if it's just the VM lean or what it is. Just let them know that we have it just keeps flickering like that.
Okay.
So the whole concept is that I have another level down here at 4135, which means I'm going to make two decisions here. If I break below this support level, it now becomes resistance. This was not resistance. This was a shitty trade. You say, yeah, but it worked. It was still a shitty trade. Now, if I come down here and I get down to this key area of interest and I get a downtrend like this and I break out of that, that's a good freaking trade. You see where I'm going with this? Your AT trader is not, I'm going to trade the AT trader today, and that's all I'm going to take because it's giving me trend line breaks. It's no different than the boss break at the right locations. Okay? Does everybody start understanding why I'm saying this? Because everybody's getting sucked in to making all the decisions on the AT trader chart, the SMC chart. And it's not the right concept. You guys okay with me kind of breaking things down like this? It's a different way of teaching. It's a different way of resetting things, making things a little smoother. I want you guys to do me a favor. Write down on your charts or write down on a notepad or whatever on your desk. Moving forward, I'm not going to take trades unless it's supported by higher time frame areas of interest. Guess what's going to happen? Less trades. Suck it up. If you're not disciplined enough to slow down your approach, take less trades, take better trades, you don't deserve to make money as a trader. Just because you spent money with me and other vendors or you like trading does not give you the entitlement to make a lot of money in this business. Time and knowledge does not equate experience and money. Nobody in here is entitled to make money. It's just like if you want to play basketball in the NBA, just because you love playing basketball doesn't mean you're good enough to get a job in the NBA. You could be a shit basketball player and still love the game. I'm a coach, and I'm a rude awakening kind of guy. But I also have helped take people that never made money before and turn them profitable and consistently profitable because I do things differently. My job is to rewire everybody's brains in here to make a whole lot more money using things that are very consistently profitable. Now, if we've got crude oil, let's use crude oil as an example. Great. Crude oil is coming into a level of support. Crude oil is coming into a level of support. Crude oil is coming into a level of support. So what I'd be doing in here, if I have a level of support right now and I have the ability to come in here and draw globalize tested fresh, right? I had levels of support, levels of support, levels of support. Okay, so let's just open up the boss trades for a second. Okay. Now I don't have any boss trades. Remember, this one was done already. This came down here, which means, here's a great example of liquidity sweep that didn't work on the boss trades. If you notice, this was the boss trade here. We came down, we pegged it, got the lift. Do you notice how this boss break came in the same area as this level? They're overlapping. That's why this doesn't work. It's not good support. Now, here's the cool part. You get another boss break up here, comes down, hits it, works. That's why when you come back down to this area, it flushes through. It's not supposed to work. Not new liquidity. Now, if I want to trade boss breaks, I don't take every freaking boss break. I take the boss breaks where the liquidity inside of this area gives me a high probability of working. How many times you guys feel that you guys get sucked into just seeing boss? I got a boss there. I got a boss there. I'm supposed to take a trade. How many of you guys psychologically get pulled into that? I know I did. Everybody does, because the software is saying, hey, boss, oh, I know I'm supposed to look at planning a trade because it's a boss break. How many of you guys admit it? That just because the software shows boss breaks on your chart, it pulls us into thinking I'm supposed to plan a trade there. Guys, that's how the deceit, that's exactly, Brian. That's how it happens. And what I'm trying to do here is to show you that if I'm going to take a trade in this environment, static, okay, the question is, am I supported down here by support? Look, I'm in support. Last down bar before the up move. Okay, I'm in support. So let me draw the line down here. Last down bar is down here. Do you see this? I will take the rotation. See this last down bar here? I will take the rotation. Like I said, it's either structure break on a Renko or the rotation flip. I will take the rotation. If I only have a down, because it's small Renkos, I will take this entire rotation. Does that make sense? I want to teach you guys how to do this. I will take the entire rotation like this, like that. And if I missed it, I wouldn't retake it. That was a tested level. I would never take that trade again. It was a missed opportunity. Let me see here. Yep, doesn't change anything. Missed trade. Move on. Down here at the bottom, nothing left. No boss breaks. Move on until there is a boss break. Does that make sense, guys? Like, don't get married to something because it didn't happen. These are tools. Tools to be able to make sure you make better decisions. But the key here is to look at this. If I have the ability now to trade a boss break to the downside in resistance, I'm going to do that because I've broken through support and these have become resistance. So if I look at the other side of it, I had a boss break here. So I'll plan this boss break if this is giving me liquidity in a new area. As long as I have resistance up here. Sean, would you take the SMC MES 3135 long if it gets there? Gary, great question. So you're talking about if it gets down here like I just, MES. Let's go back to it. So the MES is still coming here. Look at this. The MES is still in support. We never cleared it. Never cleared it. Okay, we never really cleared it.
Trend line break coming out of that level, though.
We'll take a look at that in a second. You see how we have two boss breaks here? You have this one here. You have this one here. Let's take a look at the volume profile levels. Static. Okay, let's take another one. Static. Okay. You notice how they're in two separate locations? The value rate high is here. The value rate high is here. You see how this is a different location than this? Does everybody understand that? They're two separate trades. But what I'm trying to get at is, are you okay not taking any of them? Are you okay not taking any of them? You say, well, I don't know, man. I'm sitting at my desk. I got up. I'm supposed to take a trade today. If you don't have any higher time frame helping you. This is a tough question for most traders. Most new traders never get this because they're just emotionally quick to jump into things, right? Which is understandable. It's part of the learning experience. I can't take that from you. I can't take that learning experience from human beings. It's part of life. You learn through experience in the school of hard knocks. But if I was looking at this, I would love to see this create some form of resistance in here. Right? I would love to see it form some resistance. It needs to break down just a little bit more for us to get the resistance. And then it would form. Now, you could be a little bit more aggressive and say, well, I'm going to draw my resistance a little bit sooner, which is here. And then if you look, which trade is better? Which trade is better? The lower one or the upper one? The lower one is not inside of resistance. The upper one is inside of the resistance level. The upper one is inside resistance on the higher time frame. The lower one is below it. There's a good chance that the smart traders are going to push markets through up into that liquidity sweep, take out that resistance, take it down. It's called a liquidity sweep. There's a floor here. There's a floor here. There's a lot of stop orders above there. They're going to push the stops, inducement, and it's going to pop down. Now, this is the difference between a higher time frame boss break is still long, so should we consider short on the MES, Gary? Trying to understand, higher time frame boss break is still long.
He's talking about from the volume chart.
Yeah, so this is another change. I don't look at anything like that. I don't make my bias decisions on how many boss breaks in one direction. Make it simple. Are we in a big uptrend or a downtrend? Good question, Gary. We're in an uptrend. I would prefer to be trading along the market across the board, everything. Why? Because too many people want the exact, like, I need this to happen, that to happen, that to happen, that to happen to make a decision. And fuck, you're just like, you're like a robot. And, you know, like next thing you know, it doesn't happen every day, right? I get up in the morning, I look, am I in an uptrend? Yep. Perfect. I'm going to favor longs. Anything to the short side, I'm going to take profits super quickly, even if it's a quick scalp. Now, I'm just showing some goodies here because we're gonna do this together and we're gonna have some goodies here, right? Now, MES. Okay, let's take a look at the MES. MES, let's globalize these zones. Boom, boom, boom. Take a look at this AT trader setup. It's a big level of support. Okay, it's a big level of support. We've been in a big level of support. Okay. But support's not reacting here, is it? We tried to react out of it, pushed up, failed back. We take out of it. Okay. When things like that happen, I don't mess with it. I'm of the nature that until it really shows me that it wants to stay here, I'm not going to mess with it. Because to me, it's like if it was supposed to hold as support, it would have held as support a long time ago. Like, if things don't happen right away, it's because they're most likely not going to happen. We play these tricks on ourselves all the time. I would rather be more specific and wait for price to get to a new level of support. You see how steep this trend line is coming down? Boom, 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 boom. I would rather, okay, see that come back down here. Okay. See it come back down, boom, 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 down to that level. Come down, boom, 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 and take the trend line out of this one if I can get it. And I'm willing to wait for that. Now, if this were to happen here, this is a tough one. A lot of traders are going to say, but what about this? What about this level? It's not non-valid. You could take a trade there. It's out of support. It hasn't proven that support doesn't want to hold. It's just you bank on the fact that it hasn't held here. So now you're hoping that you get that hopium. Well, I hope that I take this trend line and it's going to hope. Guys, if support's holding, it would have held already. And if it does here, great. It just proved it. Be more patient. Does that make sense, guys? NASDAQ. Same thing. NASDAQ's in an oscillating market. Let's take a look at globalizing these things out. Take a look at where these trend line breaks are. Are those trend line breaks inside of the support level? No. No, they're not. So therefore, if you take this trend line break here, what are you doing? You're just taking a trend line break on a 1-minute chart for the sake of taking it. Like if you took half the amount of trades, but you increase your probability, increase the amount of money you make, you'd be like, man, I'm getting better at this shit. The number one killer for most traders, they don't sit. They don't sit long enough to wait for what the market needs to tell them. And as a result, it becomes a very difficult business. It's a stressful situation. And I just feel that it's sometimes you need the coaches to come in and kind of help reset things a little bit. Now, I want to talk a little bit about structure breaking pivots. Okay. I want to talk a little bit about structure breaking pivots. On a Renko, you can see it really clearly. Yeah. When you see a Renko do this, boom, 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 boss break, structure breaking pivot. You see that? Had a boss break, pull back, structure breaking pivot. We need to target the low here first before we wrap the profile that way, right? Are you guys with me on this? I just want to make sure I don't jump too quickly because some of you are new and some of you are experienced. If I have a boss break, a structure breaking pivot is I go up, pull back, structure breaking pivot right there. Think about it like this. If I need to have a pullback that breaks structure and then takes out that high. That's when I wrap the volume profile that way. That's called the structure breaking pivot trade. So if I have the boss break, pull back, that qualified the structure breaking pivot. So I'll just draw it here. So there it is. Boom, boom, structure breaking pivot. It means as soon as it clears this support level, I wrap my volume profile on it and I get it there. So watch what happens. Okay. I'm going to wrap my volume profile in real time. What just happened from that structure breaking pivot? Now, where would I place my targets and my stops on this? How I trade these, I trade a 1-to-1 to the opposing swing low or the swing high. So this is me. I trade a 1-to-1. So go to this, and I take profits halfway through. So I'll come through risk reward tool. I take the entry at the edge of the level. I will take a 1-to-1 all the way to the boss break. Why? Because sometimes it overshoots. It's not perfect. The markets are not meant to be perfect. Make sense? That was a really good short today. Really good short. And there goes Gary's mindset of, well, I don't want to take anything against the higher time frame. This is the problem with traders, is they have too many biases. If it's not that one is wrong or the other is right, it's that if you put rules in place, then you need to honor your rules. You need to live by your truth. As a day trader, if you say, okay, I'm only going to trade long the market today because the higher time frame's up, great, but you need to have that fortitude and say, hey, I don't give a shit if I get great shorts today. My read on the market is I'm going to look for longs, so I'm going to be a little bit more patient. I'm going to take some longs out of key areas. You see where I'm going with this? If you're someone that says, hey, big picture is long, but if I get some great shorts, I'm going to be quicker to take profits because I don't want to be too aggressive holding into the market. You never know when the big guys are going to kick in again. Be more selective. All right, let's take a look at crude. I want to take a look at crude. NASDAQ. NQ. So from a structure breaking pivot perspective, we don't have any. I don't have any structure breaking pivots on the NASDAQ. Now, you might say, well, I want to adjust my boss settings. Well, as soon as you start adjusting your settings, because the market did this today, is the moment you go down a rabbit hole, you'll never come out. Hey, Roy, like if you change settings from one day to the next, wow, man,
changing
like,
them every day.
Fuck, you're done. Don't be changing settings on software just because the market doesn't give you a pattern on it today. Like, because then you'll go to tomorrow, and if you just would have left things the same, you need to be willing to say, hey, you know what? I'm not getting boss breaks on the NASDAQ today. Move to some other market. Move to crude oil. You see where I'm going with this? Like, it needs to be that clean. You don't want to start tweaking things to the point where it becomes a nightmare. You know what I'm saying? Now, here's a key. Okay, here's a key. You see where we didn't have a structure breaking pullback here. We had a boss break. Never had a structure breaking pullback. So let's continue back. Let's take a look here. I want to take today to spend some time teaching some things so that everybody understands a little bit more functionality. Okay. If I'm looking at crude oil today, I normally like to have my properties set to 50 so I can see the hard right edge a little bit. Okay. So if I know that crude oil, okay, is looking like this, okay, I just came out of resistance. Okay, I just came out of resistance. And interesting enough, you know, as crude's going to do what crude's going to do today, it's going to come down into key levels like this. It's still in support right now. Crude's still in support right now. Okay. And I don't know, are we Wednesday, Tuesday? What is there news today? Do we have any news today?
No, no big news.
Okay. I'm just asking because I haven't had a chance to look at things. Now, I want to talk a little bit about using the higher time frame Renko to make better decisions on the smaller time frame chart. Okay? So if I'm looking at crude oil today, are we trading inside yesterday's range? Yes or no? We trading inside yesterday's range? Yes or no? No macro pullback trade, no macro trend trade. Okay, perfect. So then I move into globalizing my levels. I come in here. I globalize fresh, tested, and broken zones. Excellent. I'm out of the higher time frame chart. I don't need it for anything else. That's the whole point. Yeah? Now, if I'm going to trade the higher time frame level on crude oil, let me see something here. Did we have a dead zone in there? I don't know if we had a dead zone that just happened. Yeah, there was a dead zone in here. Do you see that? That dead zone just came out, but it's over. It's done. That dead zone's done. We broke through it on every other side. So I'm going to leave this. I'm going to take away dead zones. Globalize, show dead zones. Yeah, I don't want dead zones on my chart. So here's a great example of you now have all this stacked resistance here. You have stacked resistance here. And we have a boss break that came out of that resistance level. So we have an opportunity, okay, to plan the boss break. Okay. Now you see in this situation that we don't have that last up bar before the down bar. So what I will do is I will take the last rotation that came from that area. I'm inside higher time frame resistance. I have a boss break that broke structure on my chart. See this? So I'm going to come in here and I will draw resistance like this. There's my level. I'm inside resistance. It's a good trade. You see where I'm going with this? That trade is inside higher time frame resistance. I have bigger picture helping that trade. I'm also in a completely new level of liquidity because the only other level of liquidity for a boss break is way the hell up here. Completely different areas on my chart. But if I wasn't inside a higher time frame level in here, now I'm just banking on a boss break because it's a 1 minute chart. Crude oil is a freaking killer, man. It's crude oil. Like, it's not the S&P. It's not easier to manage and understand the market structure. It's a commodity. At any given time, a sheik in Abu Dhabi can say, I'm going to move the market today, and they press a button. There's a great example of using higher time frames to map out smaller time frame, higher probability trades. That also shows you that if you are trading these AT trader trend line breaks, you're taking a very high risk trade to the upside because you're not coming out of support. Now, if you come down in here and this market trades here, you get a trend line break here, different story. Just because there's trend lines on the chart doesn't mean you're supposed to trade them. Like, less is more. Less is more. Okay? Is everybody with me on this? I want to make sure everybody's starting to understand why I'm piecing this together a little bit. Okay. Now, you're probably wondering what the hell is on the left-hand side, bottom left.
I was waiting for those questions.
Everyone wants to know what this is. You guys with me on this? This is nothing fancy. It's nothing fancy. But it is something pretty awesome. Okay? Remember we talked about volume and volatility being a major part? Yeah, it's an AT trail. It's an ATR trailing stop indicator that I've modified to be a volatility bands. Why? Because in the market, volatility shifts all the time. Okay? And if I go look at the S&P, okay? If I go look at the S&P today, okay, right here. I'm going to map out these areas. Okay? So I don't change anything. Like, guys, what did I say at the beginning of the class? I teach like this. I'm just like so freaking like in your face, arrogantly bold about this shit. What did I tell you about the higher time frame chart? What do we do with this chart? What is the higher time frame chart for? Lee, Phil, Brian, Mark, Robert, Samir. Where's Steven in here? Victor. Guys, what did I say about the higher time frame chart? What is it for? Why are we using it? Decision, trend, area of interest. That's it, right? That's it. That's all. Right? Bias is I would say direction is a better word than bias. Bias assumes that you made a decision on direction, but direction will tell you yes. If you have a bias, then that means you're only going to follow that, right? So here's the reality. If I'm using the higher time frame, okay, for levels and direction, right now, can I ask you a question? If I have an uptrend to the long side, would it not make sense that longs in support, by definition, by the laws of probability, by common frickin' sense, longs coming out of higher time frame levels of support would be probably better suited, okay, on a 1 minute time frame to the long side. Yeah? Like it's that simple. Like I don't know why people complicate it. Higher time frames moving up, getting longs out of support by definition on a 1 minute chart should be higher probability, right? Higher probability, right? So let's go into MES. We had a long order block on the NASDAQ, had a long order block on the NASDAQ. Didn't get one on the MES, Okay. But we also don't have trend lines coming on the MES. Okay. So if something happens, what if we told you that Roy and I have been basically building an opportunity, okay, to be able to trade volatility breaks coming out of long areas, okay, coming out of long areas, so that you have an additional trade setup. Because remember, 1 minute charts are for trade setups. Higher time frames are for higher time frames. So if I came down here and said, I'm going to just map this out in the morning, and I'm going to look for either boss breaks, AT trader setups, or ATR trailing break setups on the 1 minute, okay? Or I'm going to trade structure breaking pivots here, right? You can still trade structure breaking pivots. There's no question about that. What I'd be doing then is I'd be looking, whenever we get an ATR break, to the long side, it breaks the ATR. What we've done is we've been spending a lot of time testing the settings. What an ATR break is, I'm going to duplicate this chart so that I don't change it, duplicate a new window. I'm going to show you what this indicator does, okay? And you can go down a rabbit hole of settings here, but let me just show you what this indicator does. It's a gauge of volatility when you break it. The only thing that matters is you change the multiplier. If I sit here and I drop this down to a 3, you're going to get breaks all over the freaking place. It's going to drive you crazy. Now, that doesn't mean that you wouldn't see a profitable trade from time to time, but it also means you're going to get slapped a whole lot more. If I increase this to say 10, you're not going to see breaks anywhere. Hardly, very, very little breaks. Okay. Roy and I have been testing things a lot. We found sweet spots to be around 6 and 7. Okay. 6 and 7. And the reason for this is when we come out of higher time frame levels, by definition, we never want to catch a falling knife. Think about this. This is a higher time frame level of support. If you put a buy limit order in there and it just starts dropping, you're like, fuck, I wish I didn't take that trade. It's like it was higher time frame. I was in an uptrend, but why is it not working? Because the market's doing what it does. How many times have you guys if you have a level of demand or a level of support, you put a buy limit order with a stop loss here because you're hoping that the market's going to stop in a higher time frame level until it doesn't. What this indicator does, it stops you from needing to call the bottom. It lets you understand. That if it does decide to start holding, it should, by definition, break the ATR, which means we're going to get volatility bands on the opposing side. We have 2 trade setups that Roy and I have been testing on this, and one of them is going to be a retest trade. You put the order, you front run the order in front of the volatility bands. This is what we've done is we've added standard deviation to these ATR. Normal ATRs just have the line. What I did was I had Ben add statistical analysis to this and say add standard deviation, just like the VWAP, add a volatility VWAP around that is what I did. Because I'm all about math. I like math. I like mathematical concepts. I think they work as long as you test them properly. Take a look how it hits those bands. Didn't hit the ATR, hit the bands. Because it's like support and resistance is like an area. So I would be coming down here. I'd be dragging my pending order up with the bands. I would wait for it. See how it just went flatline right there? I would be front running that band. I'll show you. I will be front running that band right here by a tick. And I would be putting my stop loss order down here. And I would basically be putting my risk reward target 0.5 1-to-1, just like that. I'd be trading it like that. I'd be taking a 0.5 R multiple coming out of that band. Stop goes on the opposing side. If it breaks the other side, level's not holding. There's no like, oh, it didn't work. No, the market didn't do it. Watch. Comes down, you're filled long. Came in. Okay, there's your T1. It never did give you T2, and it broke on the other side. You see that? Your stop goes to break even at T1. Plain and simple. Like you're managing prop firm accounts. Move your stop to break even, protect that trailing drawdown. T1. Or some of you guys aren't even trading for a full R multiple until you banked some profits. So it hit a profit on that trade. You're trading for 0.5 R multiples until you put a couple wins in the bank in the day, or until you've gotten rid of that trailing drawdown. So then what happens? It breaks. But we're no longer in an area where you'd want to be trading long. Take a look at this next long level in here. This long here, we're not in support. We're below it. We're not in support. That's why we're not trading long. However, we get down here to this area. If I get an area where this ATR trails down and then breaks to the long side, I'm going to take a retest if that level holds, because that's the best way to trade higher time frame levels. When it shows you that it's holding, you have a much higher probability of it working. Does that make sense? You're trading higher time frame levels and you're using smaller time frame volatility shifts to get into the trade. Now let's take a look at yesterday. Let's take a look at yesterday. Now, you don't need to pay for this indicator. It's part of the suite. Like it's just giving it to you. I had them map that out. Take a look at yesterday. See this support level? This support level was created here. Okay. So it came down in here, came down in here. Now remember, we don't know when we're going to get the trades on the smaller time frame charts, whether it's an AT setup, whether it's a boss break. But one thing we do know is that the higher time frame is our compass. Big picture is our compass. Smaller time frame is the needle. Sometimes the needle goes all over the place until you stabilize the compass, right? Like you got to kind of get your balance. Well, guess what? Yesterday on the S&P, if you were paying attention to yesterday's levels on this type of a setup, take a look at yesterday's trade setups out of that level. From the pre-market, we were in support here. We also had support down below it here. This was a great trade. In support here, broke through volatility, great trade. This is the trend trade setup. We'll talk about that after. That's the trend trade setup. This is the reverse. This is the retest break trade. There's two trades. You only take the first trend trade. You only take the first break trade. End of story. Roy's going to film some videos on this. Roy and I are going to teach some concepts on this. Take a look what happened when it come back down. Watch out. There's the volatility break. Do you see that? If you were trying to catch the falling knife, you'd be white knuckling and like, shit, man, that's going against me. Oh my God, I hope it doesn't hit my stop. And then what ends up happening is it picks up. Boom. So then what we do is you say, okay, if it's going to truly hold, if this level is supposed to hold, if this level is supposed to hold because support is holding and the level is holding, then it's going to hold on the retest. What if it just did this? Straight up. We have no way to see that. No one in the world does. If you try to call those trades and you think you've got a crystal ball, that's arrogant, because nobody knows that this level was going to rip 50 points without a retest first. The market, by definition, wants a retest. The market likes retests because everybody can make a decision on a retest when the market proves support. There's the entry. There it is. Stop loss goes. You can put it a couple ticks below it. I mean, it's not a perfect science, right? Just like this. You can do it like this. Right? You'd be out there on that trade. And don't get all excited because it did this. Don't worry that it did this. Who cares that it did that? So the point is it gave you your trade right there. It's a good trade. Now we come in here today. We're in a support level. Breaks up. Retest. 0.5. Right there. You got your 0.5. You're out. Had another level of support. We're not in support. If there was a support level right here, different story, but there isn't. You're below that level. Makes sense? You're not in support anymore. Now you're coming down to support. Now I'd be paying attention to this. I'd be paying attention to this because if the market's truly going to react from this support level, gives me a good trade. This makes sense, guys? So what we did was we tested. Let's take a look here. Let's go to the NASDAQ. Take a look at the NASDAQ today. Okay, like take a look at all this support here. Now, we didn't get an AT trader. Didn't get an SMC. We got the SMC off the NASDAQ, but we didn't get it on the MES, right? Remember, you have a toolbox. You're not always going to use the same tool for every situation, and not every single time is going to be perfect. But what happened? Came into support. If you were buying the support level, you'd be like, oh, shit, that's not holding. But it broke here, okay? There's the trend trade. The break trade would have happened here, but we got the impulse up. This is the trend trade. I'll get Roy to teach the difference in the lesson. The difference is there's an impulse that comes after the break. If the impulse comes after the break and it forms a flat line, that's a trend trade. This is a break trade. Okay? Coming back into support. Break trade. Now, we're sitting in support. Okay? If it flips again in here, and it flips back up to support, we have an opportunity for a break trade retest. Sometimes that'll be the opportunity for that needs to lift. If it breaks down below, I'm going to wait for a break down here. Because you got to remember, if you come into the market today and you think that every single time that you get to a key level that you're always going to get a boss break or you're always going to get a perfect AT trader setup, you're setting yourself up for a disappointment. What needs to be happening is you need to understand the trades that are available to you. So what I did was I made a list. In our prop program, today I talked about this. I did not talk about the Bobby special. Bobby has a detour trade. Detour trades are great trades. We've added the VM lean back in here so that anybody that used to trade AT trader breaks can see them in here. Detour trades work. They're just great trades. They don't happen a lot, but when they happen, they happen. Makes sense? When you get a detour trade, okay, ultimately you'll see it on the BB. Okay, you'll see it on the BB. And a lot of times you're going to use that momentum on the higher time frame chart. Now, structure breaking pivot. We talk about this. Macro trend trade. We talk about this. Boss break. We talk about this. Okay. And we're coming into a key level of support. Higher time frame bias. I think what I'm going to do here, I'm going to move these down. And we're going to talk about this one here. These are extras. I'm just going to basically, these are new setups I want to teach everybody. I want to spend some time on it so that everybody can, these are just trades, volatility breaks. This is just levels, retest levels. So like we can just do this and go 2, 3, 4, 5, 6, 7, 8. Okay. Now, these are opportunities. What we're going to do is we're going to have some strategy lessons on these opportunities. Okay. Does everybody understand with majority some of the concepts that I talked about today? Not everybody needs to understand all of them. Vince says, when? I'm in. Okay. These are core setups. These are core setups. These are extras. We're going to teach these to you. Okay. We're going to teach a few more of them to you. What I want to do is I want to first get your approval, because I don't like making changes unless the census is agreed. Census survey says, right? I want to make sure that everybody's on the same page, so that ultimately, if you guys are okay with it, we're going to bring in a new workspace like this. I built it. You don't need to do anything. Okay? That everybody in here can basically use this new workspace. Doesn't mean you need to get rid of your old workspace. You can have it. You can keep it. But are you guys okay with us using this, simplifying down higher time frame key levels, using the smaller time frame charts for triggering reentries at the key areas of interest, making it cleaner, making it smoother, making it easier? We're going to add the AT trailing stop indicator into the opportunity so that you have an additional 1 minute setup. What's cool about this, they're all using the exact same bar type, the exact same time frame, the exact same price action. It's just sometimes you're going to get a boss break, or you're going to get an AT trader, or you're going to get this. Make sense? I need to know if you guys can do me a favor and give me a yes. I need to see a whole string of yeses in here. Just type a Y in the chat box that you guys agree as a group in here that this is okay for you guys. I don't like making changes without everybody's approval on things. Now, anybody here that wants to use the old workspace can. Okay. Excellent. Now, great example. We're coming into a key level. The way the market's trading today, it's kind of a bit slower today. A little bit slower, a little bit less movement. We got some movement, but, we're coming into a key level. So knowing that I'm in a key level. Yeah, Vince says, I struggled since the detour trade stopped being used. Great example. Now, I can't remember. It's been a while, Roy, but was the detour on the smaller time frame Momo, or was it on the higher time frame Momo? I think it was on the higher time frame.
Higher time frame. Yeah.
Now, can I ask you guys a question? And I want to know your guys' thoughts on this, okay? Multi-time frame divergence, the divergence stuff, okay? It's really great for market context, but it doesn't it's a better way to accomplish goals, Alan. Yes, I'm all about trying to make everybody think. Okay. Brian says, I don't really understand it. Brian, great. We're going to have strategy class on everything that we're doing. We're going to teach it. And if not, I can get Roy to have a quick chat with you one-on-one. We are here to make you guys 100% Johnny on it. I have a question to ask you. Okay. The divergence. Okay. Multi-time frame divergence. We don't use divergence on any of the smaller time frames. I baked it in here because I felt that it would be great for everybody to use higher time frame divergence, be able to see it. Okay. Would you guys like us to add the VM lean on here so that we can see the detour trades on the higher time frame? I think we should add the VM lean in here so we can use the detour trades on the higher time frame. Okay, I think it'd be better. The other question I was going to ask you is, do you want to keep the divergence on the higher time frame or not? Yes or no? Keep the divergence on the higher time frame or not? Because if yes, I'll just add the BBs down here. Keep the divergence on the higher time frame. Everybody says yes. Great. It was the only last question I had. So what we're going to do, we're going to go in here. We're going to add these VM leans in here. like this. You see this? Lee, old guys in the room, people that were with me a while back. Looks a little familiar, yeah?
Looks like day one.
Looks like the foundation. Back on track, Lee. Back on track, baby. Okay? Hey, everybody, you like this? We got momentum, we got divergence, higher time frame. What's nice about this, I'm going to save this as a template setting. Save as. This is the higher time frame, 3-minute Renko div. And we're going to add a little bit of VML in here. Excellent. Templates, load. The reason I like doing things as a group is so that we're all on the same page. Can't get mad at me. Can't get upset with me if you guys ask it and I give it. Three-minute, Phil, it was always the 3-minute. Back in the day when we ran the higher time frame Renkos, because the volume is a completely different comparison to volatility. We always use a 3-minute. If we try to go to a 5 or a 10, you won't have any movement on the higher time frame. The volume comparisons are not the same as the volatility. Yeah, absolutely. So we're going to use the 3-minute conversions on this. Okay, take a look at this. Take a look at the higher time frame support level right now. You see this? You see how we're just trading through it? You see how all of this comes down in here? This is why the AT trail stop is such a valuable addition to what we're doing. Absolutely, Ed. Everything I built is going to be pre-built for you. I'm going to provide the chart templates, the workspaces, everything. 100%. Okay. And I fixed all the settings so that when it loads, it doesn't get lockups. The settings were wrong on Roy's side with the volume profile. They were set to tick instead of second. I'm hoping today, Mark. Yeah, today I want to get this out today. I want everybody to have this moving forward. Yeah. And then Roy, if you do me a favor, take a screenshot of this.
Okay.
We're going to focus the strategy classes on this. That's the next several round of strategy classes.
Got it.
Make sense?
Yes, sir.
Now, great example. Coming into higher time frame levels of support on the S&P. Okay. Now, let's take a look here. The key thing here, okay, the key thing is, let's take a look at this. Delete the globals. Perfect. When I have levels on the higher time frame, I can make better decisions. So if I go down in here and I go down to uni zones, globalized fresh, globalized tested, globalized broken, watch. This is most likely going to create an AT break here if it breaks out of this level. If it takes out that AT level, that AT trail, that's going to give me an opportunity for a retest trade. I might not have an opportunity for a boss break. Maybe I will. Maybe I'm way down in here and I might have missed it. Static. Draw a static profile all the way down. Perfect. Now, I want you to ask yourself a question here. This is advanced, but it's important. Take a look at this. You got boss breaks here. You got that boss break there. Am I in a new level of liquidity? Or am I not? Has it been used up? Absolutely, it's used up. Now it could work. It could work. But it's not the point. Look what happened. We traded right through it. And it could very well trade right through it. And this is the whole point of, if you've got a level, you need to go back and pay attention to whether or not it's a good level. This level is a terrible level. That low is inside this liquidity, which is inside here, which means you're just trading a level of support that everybody else in the world can see. And guess what that means? The market can definitely take you for a prisoner. So Good training today. Different approach. Getting organized. How do you guys like the new layout? Give me a yes if this is a win. Everybody consider this a win? Good class, getting organized, getting back on track with foundation. Detour trades will be put into place. Boss break rotations in a better place. AT trailing setups going to be added for an additional trade setup. AT trader. Yes. Okay. Now I have one last question. It's a very, very serious question. Has nothing to do with the trading indicators. Roy, can you do me a favor?
Mhm.
And actually, you know what? I don't have the ability to run a poll in here.
Let me make you the host really quick.
I don't know if that opens up the ability. There they are. Yes. Okay. So I need to ask a serious question, guys. And so I'm gonna basically what? So I'm gonna ask a question. Don't worry, don't panic, everything's good. I'm just asking a question now because we're expanding. The companies are expanding. Okay. Things are doing great things, a lot of good things happening. With expansion, I need people. I need good people, quality traders. Can I ask an honest assessment in here? Would anybody in here that is a good futures trader, you don't need to be massively profitable to be a great instructor. You need to be very good to be a good instructor. You need to be a good trader and a good teacher. Would anybody in here like to come in and run a room in futures with NeuroStreet as well? Not everybody's going to say yes to this. Yeah, there might be one or two of you that are interested in the discussion. A lot of you are no. But I'm always going to talk to my inner community first. If there's anybody in here that would like to work with us full time as a trade room educator, moderator, instructor in the future side, okay, you feel you've got experience, you have to have experience, you have to understand our indicators, and it's a paid salary position, a lot of perks of the job, a lot of opportunity to be on the inner circle with a lot of advancements on what happens on the dev side, the trading side, everything. But you need to be a good trader, and you need to understand everything that's going on in this trading room as well as other software that we use. Plus, if you have some algo experience as well, that's always a benefit. It's a bonus. Now, I don't expect a lot. I don't expect a whole lot of, I would expect 99% of you to say no. Okay. Oh, yeah, Stephen, give it time, brother. If you're just getting started with us, you'd love the opportunity down the road. Hey, I've got many moderators, got many trading rooms. We're launching a Forex room in the future. Like, there's a lot of things advancing, a lot of great things happening. I can't talk about all the details because not all you guys are under NDA, but there's a lot of great things happening. So I got a couple of you guys in here. For those of you that said yes, okay, got 3 guys. Okay, great. Can everybody answer for me, please? Because only 35% of you have filled out this poll. If it's a no, it's a no. Just put no. If it's a yes, it's a yes. Like, would you like to run a trading room with NeuroStreet, paid salary, trading with us? But you got to be good. You got to be consistent. You need to know our stuff in and out. And if you're not, just say no. Right? Okay. Now, for those of you that said yes, Lee, brother, I got you. I'm in high demand. Aren't we all, brother? Aren't we all? Guys, for those of you that would love to in the future, everybody starts somewhere. Roy, how long were you a student in my room before you came in as educator? 2 years?
Yeah, years.
2 years, Roy was a student under me for years. Heck, Bobby was in my rooms for 5 years before he ended up leaving the military, coming back in full time, and now he's just a Jedi. Learned a lot from Mr. Bobby.
It goes both ways. He's learned a lot from me. Right? Gilbert didn't know the first thing about trading before he came here. Traded supply and demand with OTA, and he got his ass handed to him, $100,000 down in the hole. Now he's a frigging volume profile master.
That's right.
Who taught him that, Roy?
Sean Kozak taught me and Gilbert at the same time.
Listen, all I'm saying is that you're in the right hands. If you want to trade with us, if you want to run a futures trading room with us, and you want to work with NeuroStreet, you got to be good. You got to be fast. You got to be experienced. You got to know what we're talking about in and out. There's a few of you guys that have said yes, okay? And the rest of you have said no. For those of you that said yes, can you do me a favor and keep an eye on your inbox? I'm going to be sending you an email to set up a call with me. Are you guys okay with that? For those of you that said yes, can you just put a yes in the chat box? I don't have the names here in the poll, but for those of you who said yes, just put a yes in the chat box. Okay, Barry. Hey, Barry. Fantastic. Okay. So I'm going to follow up with you. So I'm going to follow up everybody that submitted a yes in here. Okay. And
we need expert traders, Steven. So we need somebody who's definitely familiar with the tools and who, who would consider an expert trader. Yeah.
Yeah. You need to be good, really good. Yeah. You can't be teaching groups of people to trade if you're not really good yourself. That's it. Knowledge doesn't give you skill, right? Knowledge doesn't give you skill. Just because you know a lot doesn't mean you're qualified, right? And I'm just putting it plain, guys. I'm just putting it plain, right? Take a look. If this shifts, opportunity for a levels trade out of a retest level, not catching a falling knife, right? Some cool shit. Okay. Now, guys, I hope you enjoyed the room. Roy and I are going to work around the clock today to get this out. We're going to get Mr. Ben, to add the AT trail to the zips. Thank you for those of you that said yes to coming in and running a room. I'll contact you personally and reach out to you. Roy, pull that poll report for me so we can get in touch with these people.
Okay.
And guys, have a great day. We'll put the recording up. Roy's going to set up the strategy class schedule for the next couple of weeks to teach some of these new setups. And we're going to put some great content in the members area, updated videos in the members area on the layouts. Okay. So we got a lot of great things coming in here. A lot of great things coming.
That's right.
All right, guys. Have a great day.
All right, Sean. Thank you so much. Yep. Nope. Good job. Yeah, like Sean said, guys, we're going to get this workspace, all the new indicator too, as well, over to Ben so he can update the suite. And we'll have that over to you as soon as possible, hopefully for tomorrow. Goal is to be running it tomorrow. Everybody agreed as a group that we're good to shift the workspace. So we'll make sure Ben gets that uploaded. Only a few trades today, 2 trades in the morning, but that's all we need, right? We still had a green day today. A lot of education in the, later half of the class. So everybody have a great afternoon. Coming up on the close of the session, close the European session as well. We're not taking any more trades. If anybody has any questions, definitely send us an email. Find us on Discord. We're going to pull that report. We're going to reach out to you guys individually that's interested in running a room for us. But yeah, that's all we have. Let us work on getting that workspace updated. You'll get an email once it's on the site. Be careful if you're trading into the afternoon, guys. If you need anything, just give us an email. Find us on Discord. We're here to help.
So which trade? It says Brian says your MCL SMC work for T1 as well. Not sure.
Oh, we took a trade. It was a CWAP trend trade this morning. Yeah. Oh, well, we had a SMC order block marked out for MCL. We just didn't take it. But yeah, it did hit full targets.
Yeah, and crude oil, if you take a look here, I don't know if I'd want to trade at this time, but let's take a look at this. Structure breaking pivot coming into resistance. Take a look at this. What's going on here? Crude's really messed up, man, lately.
Something with the
Yeah.
data, I think.
Yeah, it's just there you go. So crude oil, take a look at this resistance level here. So I'm just going to show you this. Globalized test zones. So take a look at this structure breaking pivot. Came in 1, 2, 3, broke the boss. What do you think that is? Let's go take a look at this. Okay, that's not a structure breaking pivot. That's not a VWAP, CWAP trade. This would have been. Let's take a look at this. You might have got stopped on that, but I don't trade crude going into the European close. So that would have been that would have been a messy trade. That would have been a messy trade. But I don't think anybody's trading crude. Anybody trading crude in the European close? I don't know. I don't like trading crude in those regards, those environments. I don't like trading any market going in the European close. That's just dangerous, right? But another thing you can see here is boss levels, boss, same liquidity areas. We don't trade these resistance levels. They're very, very dangerous. Yes. We got lots of stuff we're going to be bringing into the futures room, guys, to kind of pick things up where we left off and put the foundation back into these higher time frame charts on Renkos. I can assure you this, that everything we're doing in here has its purpose. And Roy and I have been working a long time to get this back on to where this needs to be. And I'm looking forward to working with you guys in the future, Roy as well, and also talking to some of you new educators, right? That'd be great.
Yep.
All right, guys, have a good one.
All right, guys, have a good one. We'll see everybody tomorrow.